Hello, everyone, and welcome back to the Coreco Couch. Now, I know you're eager to find out who's on the couch this time. Well, there's been a lot in the news around tax, especially around things like stamp duty and all that kind of stuff. So I thought, why not? Because we're getting loads of questions on it. Why not get onto the couch someone who actually understands all about tax? So we have tax expert Sam Lockwood, who is from Marquees Tax.
Yep.
Oh, there you go. I was thinking, am I missing something? No, it's Marquees Tax, isn't it?
Yep. Simple as.
Simple as. Well, welcome to the couch, Sam.
Thanks, Monty. Appreciate
It's
the
great
invite.
to have you. You must be quite busy at the moment. I mean, sort of
And then
as
some.
we record, it's sort of tax year end, isn't it?
Yeah, so we're coming to the end of the fiscal year, of course,
Yeah.
and that is often a driver for people wanting to complete transactions. But in addition to that, we've had a couple of changes to the stamp duty land tax rates, which came into effect at the end of last month. I forget, we're obviously in April now.
Yeah.
I don't know where the year's going. But yeah, so again, we've had a number of property transactions that have sought to complete before that date, particularly around residential properties, because the tiered rate changes that were announced some time ago, but were coming into effect from the 1st of April.
Yeah.
So that's the minimum rate you pay stamp duty land tax on, reduced from 250,000 to 125,000.
Yeah.
So, investors, first-time buyers, or people just replacing a main residence, all of which would, incentivise to try and complete transactions before the end of last month. So yeah, it's been a pretty busy time for us.
Thanks for fitting us in.
No worries at all.
So we're going to break some of that down, so people watching who might not quite know what everything's going on. So let's start with stamp duty then, because we're in property, we're mortgage brokers, and stamp duty is always a question that everyone asks us about. And it's actually surprising how many people don't realise what stamp duty is and how it's paid, and that you can't just bung it onto the loan, etc.
Yeah.
So what's your guide to stamp duty in effect? What is it, and why do we pay it?
Well, stamp duty land tax is I suppose, relatively, considering the other taxes in the UK, a relatively new tax, insofar as it came into being in 2003 under the introduction of the Finance Act 03.
Was it only 2003?
Yeah,
really?
Or the modern iteration.
Yeah,
Prior to that, we had stamp duty.
Yeah. Okay. Yeah.
And it has evolved in that time. When it was first introduced, there was a flat rate, I think, of 1%.
Yeah.
I mean, I'm saying this like I know the history of it, but at the time the changes came in, I was really only starting my career, to be honest. But yeah, it was a flat rate of 1%, I think, on transactions that were above £60,000. And obviously, it's evolved massively.
Wow, yeah,
since
it's
then.
really evolved then.
Yeah, and the costs have obviously increased in relation to the tax.
Yeah.
But stamp duty land tax is, simply put, a tax on land and property transactions within England and Northern Ireland, because there are now devolved regimes, being the Welsh Revenue Authority in Wales and Revenue Scotland in Scotland, that while they have a similar system, things like the tiered rates are somewhat different. There are some nuances, but they operate their own system with their own bodies, basically.
Yeah.
So it's now purely a tax on those doing property transactions in England and Northern Ireland.
Yeah. And how does it work then? Because you mentioned that it comes into place now. So the first 100, I've got to get this right now. The first 125,000 is exempt, and then it goes up in bandings.
I wish it were that simple. But the first 125 on a transaction that's subject to the main residential rate.
Yeah.
So you have, within stamp duty, you have what's called non-residential transactions and residential transactions, and the rates applicable to each differ. And in fact, the categorization of land and property transactions can be not always straightforward.
Yeah.
But for residential transactions, where you have a standard residential transaction. That is to say, it's not subject to the higher rates. It's not additional property that you're buying, like a holiday home or an investment property. The rates now start at 125,000. So if you don't pay more than 125,000, you shouldn't have any stamp duty to pay. There's a 2% rate between 125 and 250,000. Prior to the most recent rate change, the rate started at 5% at 250. So we've got this 2% rate now. So what you end up having is an amalgamated rate, an effective rate, we call it, on a transaction.
Yeah.
But depending on where your transaction fits, it will, a bit like with income tax, you will go within different rate bands.
Yeah. So that's changed a lot then over the years, and successive governments have done different things. Were you quite surprised, actually, especially, so it's before I get onto that, actually, so for first time buyers, you have, if you've never owned a property before, you have nothing to pay on the first
300,000.
Right?
Yeah, that's correct.
Yeah, so that's changed from 500, hasn't it?
Yeah.
So were you surprised that the government actually did that, or let that? Right, okay.
No.
There you go. Simple answer.
I think
because they want more first-time buyers on the market, don't they?
Yeah. Do I think it's right? No. Am I surprised? Also, no. There's this concept in taxation of fiscal drag, and that is essentially that, while costs of things like properties might increase, salaries might increase, the bandings at which you don't pay tax remain the same.
Yeah.
And that draws more people into both the tax net and the, paying increased taxes as well. So it doesn't surprise me that they reduce the first-time buyers relief rate. Okay, if we look at the average price of residential property in the UK, I think it stands around £270,000. But it differs, obviously, depending on the region.
Yeah,
so,
sure,
if you're a first-time buyer in London and the South East, the average property price is going to be much higher, and you're still, therefore, going to be within, the scope of stamp duty land tax.
Yeah.
Whereas if you're further up north, maybe it's more like sort of the £270,000 mark, and then you might benefit from the relief came fully.
Yeah, I think that's a really, actually, do you know what? I was talking about that yesterday, and actually it's quite easy to become quite London South centric, isn't it? Whereas if you're in a lot of the country, that 300,000 still helps quite a few people, first time buyers.
Yes, it does.
In London, you're way over it straight away, aren't you?
Yeah, exactly.
Yeah,
exactly.
What do you think about the sort of the changes in stamp duty over time? Has it, because it sort of distorts markets, doesn't it?
It does.
I mean, I've said I'd love to see, for example, the government just getting rid of stamp duty just for first-time buyers straight off. But do you see all the tax as a fair tax, or the changes cause lots of issues?
Well, I mean, property taxes on acquisition of land and property is something common around the world. There are fewer countries that don't apply a tax on the acquisition of property than there are those that do.
Right.
So in principle, I don't have a problem with it as a sort of a capital tax on the acquisition of an asset. However, the issue I have is, the way in which governments, and this is a broad point to do with tax generally, is tax policy is intended to steer sort of social engineering. Do we want people to invest more in green this or green that? Or, do we want more people to invest in their businesses? Okay, well, how do we achieve that? We introduce some form of tax policy in the form of perhaps a relief, which will encourage more people to do it. So, I mean, slightly off topic, but take, for example, electric vehicles. Company owners have been encouraged to acquire new electric vehicles. They command high prices and high depreciation, so it appears. But business owners have been encouraged to acquire these vehicles with the incentive that they can write off 100% of the cost in year one. And the benefit in kind charges, when they were introduced, were very low. In fact, I think they were zero, and they've slowly been incrementally increasing by 1% per year. But actually, if you now look, I get the impression that, governments will steer people in one direction and then slowly close the gate behind them. So you're all herded. And then, like with the case of electric vehicles, they start to incrementally increase the benefit in kind charges. So, by the end of the current parliament, I think it's going to be about 9% the benefit in kind
Right,
charge.
okay, that's really interesting.
And it's calculated on the list price of a vehicle. So, yeah, coming back to stamp duty, decisions around, changes over time in policy have been driven, I think, for one or two reasons. One is to collect more tax, but also to sort of steer markets. So for example, a good example is the higher rate on additional dwellings, which was introduced in 2016. So initially, it was a 3% charge for people buying, additional residential property, perhaps holiday homes, investment properties, and such like. That charge has increased to 5%, and the intention is to basically steer casual investors away from the property market.
Yeah.
They don't want you, investing in properties and potentially reducing the stock available to, for example, first-time buyers, other home buyers.
Yeah.
So yeah, it serves a dual purpose of raising tax revenues, but at the same time trying to control what people do within markets. And obviously it has then an impact on the number of deals being done. Perhaps, for example, I think I've had a lot of conversations with investors who are looking to exit the property market, and it's not just stamp duty, it's things like, tax rule changes to do with mortgage interest on residential properties. These are squeezed investors. And so what's the result of that? Okay, yeah, maybe there's more stock on the market, but also there's less stock available to renters, which perhaps drives up demand and prices.
Yeah, absolutely. So where stamp duty is concerned, what are the biggest misconceptions around it that people come to you with? And well, the biggest question that we get sometimes is, how do I get around it?
Yeah, of course. Yeah. It's not always possible to get round it. As I explain to clients, it's not what we're here for.
We would never advise,
by
the way.
How do I pay zero stamp duty is the starting point. Sometimes it's like, well, that's the wrong way to start this conversation. Misconceptions are things like, and particularly to do with the application of the higher rates on additional dwellings. So often, for example, I'll have a client who'll say to me, I'm married and my wife owns another property. So if I just put the property in my name, I've never owned any other property before, am I subject to either the main residential rate or can I claim first-time buyers relief? And they may well have entered into a negotiation in good faith, having made offers, having had them accepted, assuming that they are not going to fall within the higher rates, which isn't actually the case, because a married couple were treated as a single entity for stamp duty land tax. Another one, not to do with the higher rates as such, is gifts of property. So, if there's no consideration because, you're gifting a property, generally there's no stamp duty land tax. But one of the things that often gets overlooked is what's called deemed consideration, where, for example, the transferee, the person in the receipt of the gift, they may well take on the liability. So mum's got a property worth 250,000, it's got a mortgage of 125. They gift the asset away. And the person in receipt of the gift, then they'll come and speak to you. They'll get a mortgage, and they'll take on liability for the debt. Well, that is consideration for stamp duty land tax. And if the consideration is over 40,000, and it's not like a main residence purchase, it might be an investment, or the person in receipt of the gift owns other property. Well, then you're going to suffer a 5% tax charge on that gift. So that's an assumption that I often hear. A lot of taxpayers will assume gifts and other transactions that where I'm not personally benefiting, or I'm not paying any more, or I've paid stamp duty before and all I'm doing is restructuring the ownership of my asset, why am I paying stamp duty? And that's not the way it works. And another common one is to do with people wanting to move properties to their limited company. As I said, they would have paid stamp duty when they originally purchased it, and they can't understand why. The company then has to pay stamp duty if they want to move properties into their company.
Yeah, that's another very common one that we get. Actually, the married example is a brilliant one. I had that exact question at one of the education seminars I was doing, and I was hoping as you answered it. I did preface it with I'm not a tax expert. However, my understanding is you would still be liable for it if you're married.
Monty, if you want a job, like, you know.
I think you can do better than me, to be fair, where tax is concerned. So, yeah, it's really interesting, isn't it? And that whole buy-to-let question, obviously, is something that we get loads of. So there are several things because of all the tax changes in the buy-to-let world. You mentioned it. You're seeing people. Are you seeing a lot of people changing existing properties that are in personal names into limited company names? We're not seeing as much as we thought. We are seeing new borrowers borrowing in a company name. But what are the tax advantages and disadvantages of doing that, putting a property in a company name? So it's not quite as simple as, oh yeah, it's much better for you, is it?
I think a lot of people don't seek proper advice around this subject, or they'll have a general conversation with their accountant, and they'll often approach whether or not it's something they should do with basically a lack of knowledge and misconceptions as well.
Yeah.
And it's not a one-size-fits-all approach. You know, when we're speaking to clients, you know, they might well have an assumption that this is something that they should do, but they've not considered all of the potential tax consequences specific to their situation. So in terms of advantages of moving to a limited company, well, the main one over, I guess, the last 8 years or so has been, you know, that with residential property, you can't claim mortgage interest as an individual in calculating your rental profit subject to income tax. You do get some form of relief at the basic rate, but it does mean if you're a higher rate taxpayer, you've seen your tax burden increase.
Yeah.
That's been the main driver moving to a limited company. And why? Because limited companies aren't impacted in the same way by that legislation. Mortgage interest on residential properties is still wholly tax deductible in calculating rental profit subject to corporation tax. But perhaps what people don't consider is, okay, great, I can reduce my taxable profit, and great, you know, if I'm a higher rate taxpayer, instead of paying 40 or 45% tax on that profit, I'm instead paying corporation tax rates of between maybe 19 and 25.
Yeah.
Well, if you're living off that profit, you're then going to have to take the money out, and you're going to have to declare a dividend or take it out as salary. And guess what? You're then getting double taxed on that profit, because you're then having to pay tax on the profit again. And then your overall rate of taxation is much higher. So, you know, if you're someone who is a higher rate taxpayer, perhaps, and you're looking for a tax efficient structure to grow a portfolio, you're looking to minimize that tax leakage now and maybe draw on profits at a later date when it's more appropriate to do so, more tax efficient to do so, then, you know, a company structure might be ideal for you. But if you're perhaps a retired individual who is now enjoying said retirement by drawing on all income streams to their maximum potential, so, you know, perhaps you've got a pension that puts you into the higher rate and you want to live off the rental income of your portfolio to basically enjoy your retirement, then actually it wouldn't be advisable for you, because you're going to be paying higher rates of tax overall. The other thing about companies actually leans us towards sort of maybe inheritance tax and estate planning opportunities, because the issue with property from an inheritance tax point of view, I feel like we're going over all taxes. But
No, it's
this
great.
happens, honestly.
I'm going to ask you what your favourite tax is next.
None of them. I don't enjoy paying any of it. But no, from an estate planning point of view, one of the issues with property is you can't give it away without triggering a capital gains tax charge.
Yeah.
And you can't benefit from the income because otherwise there's a reservation of benefit, and you've achieved nothing in terms of the gift, which would be, you know, a gift that then exits your estate within 7 years typically. Whereas if you operate a company structure, you know, you can control the rental portfolio as a director, salary director of the company, but you can then start to give away the shares in your business to the next generation.
Right.
So it can be also an effective tool operating a company for that reason as well. Number of advantages and disadvantages to operating through a corporate structure. Generally, the main advantage, just to reiterate, is to do with mortgage interest on residential properties, but it's not a one size fits all.
And are you seeing lots of landlords actually sell up because they think the
Trying
tax
to.
is too much?
Yeah, I think it's a joint thing, and I know you'll be acutely aware as well that because interest rates have risen over several years now,
Yeah.
that a lot of buy-to-let investors were enjoying the low interest rates to build portfolios that generated regular income returns and capital growth.
Mm.
And I don't know what you feel, but some of my clients are sort of saying capital growth is there has been some stagnation, but in terms of actual profits, real profits, some of them are saying they're completely erased, that they're running at a loss at this point. And that's affecting more and more people as their fixed terms come to an end and they enter into new mortgages, basically, at higher
Yeah.
interest rates.
Yeah, we've certainly had that discussion. It's quite an interesting one in terms of that. And it does seem that the more amateur landlords who might hold one or two properties are thinking actually it's not worth it anymore.
Yeah,
But again, as you said, it does depend what they're holding it for. Are they holding it for income now or actually capital growth? I mean, a lot
yeah.
of them don't worry. They don't, if it's long-term capital growth, I still think, it's bricks and mortar. It's still property. We're
Supply
resilient.
demand, right?
Supply and demand. And even if they increase supply and they do build 1.5 million new homes, that's going to help, but it's not going to dampen down the demand that's there and the pent up demand that's built up
Yeah,
over the years. So even at its lowest point, and I made this point in the presentation the other day, even if you think, property prices, say they grow, let's say 3% a year for the next 5 years, which isn't much, it's nothing really. But then you look back in 5 years, that's 15% growth.
yeah,
And all of a sudden, that's quite, that actually is a lot. And over sort of 5-10 year periods, I think it's getting away. And some of the frustration I have sometimes is people looking at property as a short-term asset
yeah. It's
when
not like
it's
stocks and
not.
shares.
Yeah, and maybe part of it is that's media to blame, and it's maybe it's our industry to blame a bit in the way that we've been talking in the past, not now, but in the past. And people do look at their property and think, oh, has it gone up or down in value today? And you're like, just live in the property.
Yeah.
If you live in the property, enjoy it, or you invest, it's a medium to long term investment property, isn't it?
It's the most important investment you're going to make in your life still, in my opinion. Your primary residence, that is.
Yeah. Yeah, absolutely. So we mentioned a lot of taxes. I won't ask what your favourite tax is, by the way. I don't have a favourite tax. But where do you think, if you look at where we are now as an economy, where do you think the government should be concentrating? We know they're in a position where they need to raise funds. And the government have been at pains to say that obviously we're not going to change the big taxes. Whether that remains to be seen. But where do you think they could go next?
Yeah, so as I mentioned, I can't see them increasing top line rates of tax dramatically because it creates a negative publicity for them. There has been ongoing attempts to, minimise or eliminate relief claims that are applicable for certain taxes, including stamp duty. And last year, they abolished multiple dwellings relief, which had that quite.
So what's that? What's multiple dwellings
Multiple
relief?
dwellings relief is a relief claim that was applicable if you bought more than one residential dwelling as part of the same transaction,
Right. Okay.
or series of transactions. So it was introduced and intended to, let's say, for example, you were buying a portfolio of properties, residential properties, or mixed, or you were, you'd negotiate a multi-unit deal with a developer, for example. I'm going to buy 3 flats in your development at £500,000 each. Now, when you're buying generally more than one property from the same vendor, and if it's part of the same deal, it's regarded as what's called a linked transaction. So the way in which you work out stamp duty is on the total price paid. So it's akin to as if you bought a house for 1.5
Yeah.
million. And with the sort of the tax tiering system that we have, under normal circumstances, that would have pushed you into, paying much higher rates of stamp duty, land tax overall on the transaction. So multiple dwellings relief was intended to offer some relief where you're doing these multi-unit purchases. So the way the relief would work is that you would take the total consideration, divide by the number of dwellings you're buying. So the example I've given, 1.5 million divided by 3, 500,000. You work out the stamp duty on that. And of course, it doesn't push you into such high tiers. And then you multiply that by the number of units you're buying.
Yeah.
So overall, you end up saving a lot of stamp duty, land tax. That was abolished, and I think it was rather short-sighted. In fact, I'm sure it's been quite short-sighted, and I think the government may have, in typical fashion, used a proverbial sledgehammer to crack a walnut, because to give you some backdrop to this, there was a consultation that HMRC entered into perhaps about 3 years ago, and they'd identified that this relief claim was being used by people buying, main residential dwellings that might have benefited, for example, from a granny annex.
Right.
And their argument was the relief was never intended for that purpose.
Yeah.
Albeit the legislation is written such that you can claim it for
Yeah.
that. There's some specific wording in the old legislation which basically enabled you to claim it for main residences. They even say, like, look, if you reduce the number of dwellings within 3 years, then we can claw back basically the stamp duty. So they argued that it needed to change, HMRC that is, and they made some recommendations which were reasonable, such as, look, this relief can only be applied if you're buying more than, say, for example, 3 or more dwellings.
Yeah.
And that would take out people using it when they're buying a main residence with a granny annex. But what the government did is they just abolished the whole thing.
Yeah.
And why I believe that's short-sighted is imagine you're a developer and, you rely not just on making individual sales, you're relying on making, potentially bulk sales to, I don't know, like equity funds and pensions and, big investors. They're going to be deterred from buying more than one unit from you because the amount of tax they're going to pay is going to increase exponentially. So yeah, I thought that was rather short-sighted on their part.
It's really interesting. So if you're in government and your job, Sam, is to come up with a perfect stamp duty system, how does it look?
I think it needs to be simplified, or the way in which stamp duty is dealt with needs to be separated from the conveyancing aspect of a transaction. At the moment, there's a lot of pressure on conveyancing solicitors to not only deal with the conveyancing aspect, the legal aspect and conveyance of title, but also to calculate the appropriate stamp duty due. And hopefully, maybe throughout this podcast, I've demonstrated it's quite a complex area. So they're required to calculate the amount of stamp duty due and file the relevant returns. And added to that fact, HMRC have a relatively simplistic tool, a calculator, which aids both individuals wanting to work out what their SDLT might be, or companies purchasing property, but also is heavily relied upon by conveyancers. That I think we need to move away from that. We need to either have a more sophisticated calculator that helps identify potential reliefs, for example, helps to categorize transactions which aren't straightforward as either residential or commercial, or rather, we have this separation. So there's an encouragement, more than there is already, for purchasers to go to a tax advisor to get specific tax advice on transactions. And maybe it's just like a sense check, but basically it's part of the process that, a qualified advisor will look at a transaction and give it the seal of approval, or perhaps ask more pertinent questions to kind of work out whether or not is it being dealt with correctly. And then conveyancing solicitors can rely on just dealing with the legal aspect and component of a land transaction.
I never thought of that, actually. You've really made that really interesting. So it's like mortgages, isn't it? It can be quite a dry subject, but I found that really fascinating. What advice would you give for buyers and investors navigating stamp duty and tax generally in this year?
The simple answer would be seek professional advice. Don't assume that a transaction is as straightforward as perhaps you or your solicitor might initially believe. And we obviously haven't had a chance to go through it today, but there are numerous reliefs out there that can be considered in relation to land and property transactions. And the other thing is, for tax advisors, we're constantly looking at, interpretation of reliefs, tax cases that may have been heard at tribunal that set legal precedents about interpretation, where, for example, guidance or the legislation doesn't make it clear. So, it could be 1 year, the advice might be, oh, you're buying a property that's got a lot of land with it, it's mixed use, and, therefore subject to the non-residential rate. Great, you save yourself a bunch of stamp duty. But there have been cases heard at tribunal more recently that might change the analysis in relation to that. So always seek professional advice. It's always better to get to the right answer than to, as we sort of said right at the beginning, some misconceptions make presumptions, get the wrong answer.
Yeah, exactly. And finally, very quickly, what's the best piece of advice you've ever had?
Do you want tax advice or
just general advice?
Just general advice. I was talking about this with someone over lunch today. The best piece of advice I ever had was to do with business. And it was that they said, when you go to work, don't pat yourself on the back every day just because you've been super productive, you've answered 100 emails. Go into the office with a clear idea of the 3 tasks you have to complete. Make it your priority to complete those 3 tasks. And, every day will be a win, basically. I implemented that advice? Not always, but I always thought it was a great piece of advice.
Love that. Yeah, really good. Thank you.
No, you're welcome. Thank you for having me.
Thank you, Sam. I really appreciate that. And if you do have any questions around tax, don't ask me. Find Sam Lockwood at Marquees
Tax. Yep.
And thank you very much for your time. And thank you for watching. And tune in next time to see who is next on the Coreco Couch.